Good morning, everyone, and welcome to the European Crossover webinar. And we did see for the most part, the COVID stimulus package pass here in the U.S., but we are seeing a fade the news or buy the rumor, sell the news position as we're seeing the Nasdaq has dramatically come off. We can take a look at that in the ES. I actually sold right up here at the top. I thought I covered obviously way too soon. I wasn't sure, concerned it was a Sunday evening, maybe kind of holds and then we jump up a little bit further, but it's just been a steady fade from that point. You can see we've come off quite a bit. Actually, from where we were at, we've come well off 300 handles, which is fairly huge. We can take a look at the E-minis. The ES has come off quite a bit also. From almost 38.70 to 38.12. So that's come off, it was the 38.60. So that's come off essentially 50 handles. As I mentioned, quite a bit of a sell-off. But we've come down here to this 12,395 area here. This is on the 2-hour chart. Actually, see here, we made it right to the VWAP of the October lows before fading back. And take a look today. We did get, actually at the bottom of that, we'll get our European Centix index. Reuters poll's going to be for 1.9. And then in the States, we just have employment trends at 10 a.m. Eastern, along with wholesale inventories. That'll be it for the rest of the day. So no news basically until we roll into the next day, which for us would be the evening, but for those in across the ocean would be the morning, which is in Japan, and NAB business conditions out of New Zealand. And then tomorrow we'll have German import-exports. Along with employment numbers and GDP, but revised out of Eurozone. That'll be tomorrow, along with Mexican inflation, and then nothing out of the States. And you can see bonds on the lows. There's some key support down here at the 23.5, right here on the 10-year notes. And take a look where we stand here with the euro. Euro still pairing back. We are kind of coming into some key support here. There we go. Right here. 1870. There's actually, I mentioned I was going to reference that. I don't know if I highlighted that or kept that saved. I don't think I did. Yeah, I had these saved from the other day, and I did not. Guess I didn't save them. But I know that we were coming into a key area here, just below. You can see right here at the 1871.70, and here's 1875. Yeah, all the way down here to this 1862. So between 1870 and 1862, seeing look at some good demand that would come in. And you can see this is just beyond the 61%. And I've got some support here at 1870 coming all the way across here. With that, we'll go in and take a look at the news. Also, we saw Bitcoin coming off a little bit. So rush to Bitcoin, not so fast. They keepers of the corporate coffers. When Elon Musk Tesla became the biggest name to reveal that it had added Bitcoin to its coffers last month, many pundits were swift to call a corporate rush towards the booming cryptocurrency. Yet there's unlikely to be a concerted crypto change at any time soon, say many finance executives and accountants, loath to risk balance sheets and reputations as a highly volatile and unpredictable asset that confounds convention. Yet when I did my treasury exams, the thing we were told as number one objectives is to guarantee security and liquidity of the balance sheet, said Graham Robinson, a partner in international tax and treasury at PwC and advisor to the UK's Association for Corporate Treasurers. That is a fundamental problem with Bitcoin. If those are the objectives for treasuries, then breaking them could get them in trouble. Tesla's $1.5 billion bet saw it join the business software firm MicroStrategy, and Twitter boss Jack Dorsey's payments company Square in swapping some traditional cash reserves to the digital coin. Proponents of the cryptocurrency see it as a hedge against inflation at a time of unprecedented government stimulus, a falling dollar, record low interest rates that make attractive high-yielding assets hard to find. While the moves have prompted more boardroom discussions, though, headaches from Bitcoin's volatility, accounting for it, and storing it are likely to preclude a big wave of companies holding large amounts of balance sheets in short term, according to the over a dozen financial officers, board members of accountants interviewed by Reuters. Obviously, it's had pretty much of an epic run here. We're starting a little bit here. I can print the story later on, or make it available here in the chat. Let's go on and move on, and we'll take a look here with what's gold. Gold's gotten whacked pretty good. We can go on and take a look at that. Bear with me. So gold rebounds from a 9-month trough on U.S. stimulus and lower bond yields. Gold rebounded on Monday from a 9-month low hit that last week as bond yields retreated, and the passage of a massive U.S. stimulus package boosted bullion's appeal as a hedge against inflation. The market's probably sold a bit too much last week at higher yields, and yields seem to be plateauing a little bit right now, said Stephen Innes. The yields on 10-year Treasury notes held below a one-year peak hit on Friday, reaching the opportunity cost of holding the non-interest paying gold. The passing of the $1.9 trillion COVID relief plan by the U.S. Senate on Saturday also provided support. Inflation is definitely going to go up because of the rising oil and base metal prices, daily FX strategist Margaret Yang hang out that some of the individual U.S. stimulus money may also go to into investments such as gold exchange traded funds to hedge against future inflation and attack at the heart of the Saudi Arabia's oil industry on Sunday with drones and missiles from Yemen's Houthi forces also boosting gold safe haven demand. The bullion is considered a safe haven during times of financial and geopolitical uncertainty. And on to FX. Dollar stands tall as U.S. yields resume the climb. The U.S. dollar gained on Monday, climbing towards a 3.5 month high as broad rise in Treasury yields spooked investor sentiment in stock markets. Having fallen 4% in the last quarter of 2020, the dollar has strengthened more than 2.4% year to date. Rising yields have added to the equity market volatility and supported the U.S. dollar. UBS strategy said in a note, the Federal Reserve remains dovish, but Jerome Powell chose not only to push back verbally against higher yields and a further short-term boost to the greenback. While U.S. yields increased a hefty 10 basis points, German yields dipped nearly 5 basis points, pulling the euro to a near 4 month low below the 1.19 level. Bank of America analyst Vamakidis argued the potent mix of the U.S. stimulus, faster reopening, greater consumer firepower was a clear positive for the dollar. The dollar index stood at 92.18 against a broad basket of six currencies. The Aussie was at 76.96. The antipodian currencies have been in high demand because of their links to global commodity trades. The dollar held a 1 month high against the British pound at 38.19 against the lower yielding yen, and the greenback held steady at 108.46 yen. Oh, sorry. Thanks, Jane, for putting that on there, but no sound. Uh, oh, I was saying about platinum is that you can see here we came down to this 1136 area here, and that we'd taken a dip below these prior lows. We're holding here, but the key, and there's some additional support down here at 1104, but the key is we need to get, before the end of the week, we need to get above 1170. That's going to be key before the end of the week. Uh, I'm a bit surprised we weren't able to bounce a little bit more in light of the stimulus package. So that's a little bit of a concern, but we're holding our own. Interest rates are high. That might be weighing a little bit on there. But before the end of the week, we really do need to get back. We need to make a stab above 1170. If we just kind of hang around here, and this is a 50-day moving average, then that's going to open the door for us to test even lower, and that lower support is going to come in at 1104. Kind of middle of the roading it, but we should be pushing a little bit higher. And this platinum does need to get above 1170 before the end of the week. With that, we're going to move into the analysis. As I was mentioned here, if you were to look at the profile, remember we had saved it last week. I had an example here. I guess it didn't save on this chart here. But you can see here, now this was the futures, but it's still going to balance out, which we've got some pretty decent support coming in here in this 11,870, 1870, 1860, and you can see coming right across. So some pretty good support as we come down and dip just sub the 1870 right here in this area. Decent, and you can see also here, pull this out. Got some decent demand here. Of course, like I said, you've got this shelf, as I mentioned. This dips down to 1840-ish right here. But you can see a lot of action is taking place here. But this first line of support shown here at 1870. We'll take a look at where we stand here on this. Mary says, thanks for taking a look at platinum. Sure, of course. And so Euro finished the prior week on consecutive losing sessions. Boy, did we. Support will be 1853 70. I don't know why this thing doesn't save that there. I used to think it was me that was doing it, but it's not. I guess on the first go round, when you first input it, it just doesn't save if you have a forward slash there. And it still didn't say that. See that? So it's 1853.70 with resistance at 1958. So let's update that. And if you saw the profile, we do have right in that area that 1862-ish. So down here, and we've already gotten past the 61% of this move. So you definitely, and look how far we pushed back. So anyone that was short probably would be taking some off the table. You always got to look at the other side of this. And then resistance would be at 1958. You can see right there. And you can see we've had pretty good sell-off, and we had that big old stab up there above 23. Actually, it's 22, but we got all the way up here. And remember, we had some pretty good resistance. I think my resistance level at the time was like, I think it was like 22.52, I believe it was, and we got up to like 49 or something else. It says 40 here, but I remember the resistance being right there, and came in right there. I guess and I think it was a weekly or something at 52, but it came pretty close, and then we sold off quickly, and then caught a lot of people. A lot of people got trapped on this, and that's why, hence, we saw that big sell-off as they got trapped. I think we discussed that at the time, and then the market kind of meandered. We still kept, because it was bullish, we came right back and we held here, and then remember 2073 was so key. That opened the door for us to move lower, and we saw that over the last couple of days, and we're pushing. We might be a little bit stretched then, so that's what I'm saying, coming in here, this 1870/1860. Now, our support is 1853 to 1870, but we're a little bit stretched, and then we have as I mentioned, the profile comes in. There's some good support around that 1862-ish. So, and you can dip a little bit lower, but Probably a good area. If someone was short, definitely would be taking some of their money off the table. Maybe not all of it, but a decent amount. Moving on to the cable. Cable closed lower 3 consecutive sessions to close the week. Boom, boom, boom. 1, 2, 3. Support to start the week comes in at 37.32, which confluences with 37.49. Resistance comes in at 39.23. So cable's holding up better than the euro is, but let's go and mark that off. And also the bias chart resistance and supports I did for the start of the week, they're more, well, the euro already dipped into it, but they're more expanded out because I'm thinking, okay, the same thing like here, the way we saw the euro, hey, this thing could really start to dip back. So as opposed to making it so close as it is the start of the week, I'm looking for moves down here. They may allow the market to flush out some positions. So once again, support comes in at 37.32. You can see that would be just below this 50-day moving average. Which confluences with 37.49, the 50-day moving average. It's actually moved up a little bit higher since this weekend to 54. Resistance comes in at 39.23. And with that break here, that would actually have to turn to bearish now on the euro. Cable's still bullish. And onto the Aussie. So the Aussie paired back as U.S. interest rates took to the main headlines. Bias chart support comes in at 76.23. You can see that here, which we hit on Friday, and will remain key support. Resistance will be 77.12. Still remains bullish so far. We'd have to flounder in here for a little while before we could necessarily change it to, let's say, it was neutral. Let's go and move into the Kiwi. So the Kiwi challenged bias chart support on Friday, finishing the session with a small hammer bottom. Resistance will be 72.09 with support at 71.32. Well, we're already sliding below that right now. Even though they got the hammer bottom, they're testing it. So and we're actually below that. We'll keep it at the 71.32, but remember, look, we're already pushing below that. And even though we had this hammer bottom, they're already pressing them lower from the get-go. And resistance would be 72.09. Now, looking at this, and then we've broken here, we'd have to go and change this more towards the neutral. I guess we caught range for right now. Can't really say it's bearish until we get, you'd have to have at least 2 consecutive closes below this area to say now we're bearish. So kind of like a neutral range for now. Moving on to the dollar CAD. Wow, Nasdaq just made new lows again. Holy smokes. We are some support at 12,385, but yeah, we just made new lows again. Man, just like when it looked like it's putting in a little bit of a bottom. Dollar CAD rallied on Friday above the 27, even before being pushed back to as U.S. equities rallied. Support to start the week will be 2607 with resistance at 2721. And onto the dollar peso. Man, they are really beating that NASDAQ futures like nobody's business. So the dollar peso continues to march forward. The breakout extension from 3 weeks ago, we covered that here, still points to 2162. Oh wow, we're right there. Resistance to start the week will be 2148. We supported 2104. Well, there's our extension. I put it back. Like this is an extension that we done 3 weeks ago when we were down here, and we said, okay, if we take this and this, it gets this points to 2162. Well, we're there essentially. So that being said, we'll go with that extension for the resistance which we had from 3 weeks prior. So 2162. And support, in the meantime, it's going to be right there. 20. Oh, wow. Just look at that. That bar right there just happens to confluence with that low from the other day, which would be the 2120. Let's go move into the dollar yen. Well, they're responding to rates right now, but the dollar yen has tagged a key weekly resistance level of 850. Actually comes in specifically at 852, but which will remain resistance to start the week was supported 783. Yeah, it actually comes in at 852. That weekly, we'll take a look at it, but they're challenging it, and you can see coming right across it here. Actually held the other day, it did okay, but it actually comes in at 852. We'll see how we finish the week. Today's only the first day. And support in the meantime, let's go to the 2 hour. That's going to come in, I hate to say 833 right there. Let's see here. Yeah, right there. We'll just go with that. That's a little bit tight, though, but we'll leave it there for now. 831. I don't know about that support. I think that's a little bit too. It's a 2 hour chart. Let's go right there for starters. We should put it right there at 818. 818. And onto the dollar index. As I said before, I don't consider this to be bullish until we get to 92.68. And like I said, we're just and actually the thing has not responded to indices at all, despite the sell-offs we've seen over the last 3 months. I mean, we've snapped back, but then I'm talking about the indices. Only thing that's pushing us now is going to be these yields. Craig. So to me, it doesn't get bullish until you get above 92.68. Then you can say, now we're bullish. And we're just barely now making it up to this 92.17. But let's take a look at the analysis. The dollar index has rallied over the last couple of days as rates have spiked up. The index paused at resistance level 92.17, which will serve as resistance to start the week. So we're above it right now, but we'll mark that up. And support will be 91.51. And onto the cross rates. Okay, the Kiwi Yen looks as though it may be set for a pair back upon reviewing the last 4 days or 4 bars. You can see right here, you get this hammer. Okay, looks good. Then it looks like a little gravestone doji. Then they even test it higher and same finishes at the bottom. Then you get this little mini hammer. So it looks like it's open to go lower. Lower. It looks like it's already moving. So support for the week looking at will be 76.31 with resistance at 78.11. Still remains bullish. And onto the euro pound. This thing still remains sick. The euro pound spent the prior week easing back to support at 85.95, which will be support to start the new week. Resistance will be 86.60. A break on a closing price on either side will drive momentum for the week. So going with 85.95. Well, it's at the moment below that. And 86.60. And onto the euro on. The Eurod is, as the song goes, stuck in the middle. The overall tone remains bearish, but the pair is taking a pause. Question is, before what? A move lower or higher? Resistance will be 56.20 with consecutive daily closes above to generate momentum. Support will be 54.07. And on to the Euro Kiwi. The Euro Kiwi is attempting to base. Support for the start of the week will be the 65.32 with resistance at 67.35, which is kind of like hanging around here. Like I said, it's just a matter of whether we push these levels, 65.32 and 67.35. And on to the Aussie Yen. The Aussie Yen has stalled. The break lower is a strong possibility. Support to start the week will be 82.42, followed by 82.02. Resistance will be 83.79. So we're open to go lower. Probably for today, it may just be the 82.42, but tomorrow we'll probably have to follow with this 82.02. So let's go with the 82.42. And the guppy. The guppy appears to still have some upside juice with another new weekly high. Resistance to start the week will be 51.36, with support at 48.56, followed by 47.97. So 48.56 on the downside. And lastly, with the sterling odd. Oh, we're starting to wake up a little bit because of the weakness with the odd. The sterling odd is attempting to push past the 80.40 level, but has stalled. Bulls may need to do some further work on a pair back. Support to start the week will be 78.68 with resistance at 80.58. Well, we're actually pushed above this 80.58 right now, but that was our resistance. And definitely holding above this 78.68 as we've broken up here. So support at this point, in light of that holding, is going to be right there, that bar there, which actually is the low for the day, essentially 79.34. And there's a buys chart. And as I mentioned, we can take a look at gold here. We're still sucking wind on this gold because those interest rates are so high. They tried to make a stand, and we're still being pushed back. If we take a look at it on the weekly, well, right there, it's 1666 is huge. This is huge support here at 1666. Doesn't mean we can't dip below it, but the key would be for this market to hold above, obviously it's just the first day of the week, but 1666 is absolutely huge on a weekly basis here for gold. And take a look at crude oil. Well, what a phenomenal run. There is bar right here before they took off, and that's where they're running out of gas a little bit. 67.75 it appears to be. Right there before they took off. You see right there? Whoa, that's exactly where they stopped. 67.84. See that? Right there. So maybe we'll get a pause here. Right there. And you can see here it took out this high there. And now they're a little bit of a dip pause here. So there we go. I'll go and get the buys chart posted. And thanks for joining us here on the European Crossover webinar.